Okay, let's now go to the additional questions in activity based costing. I think it's a very good question and slightly a lengthier question. Profit margin of baby hair clips company were over 20% of sales, producing brown and black hair clips. During the last year, green has been introduced at a 10% premium in price, and yellow was introduced 5 years back at 10 by 3% premium. However, the manager is disheartened with the sales figure of the current financial year. Brown, black, yellow, green, and total. The profit margin is given. Sales, material cost, labor cost, overheads is three times of direct labor. Operating income here would mean profit. And the return on profit is, or return on sales is net profit margin. Brown, you are earning 13.3%, black 13.3, yellow is 14.8, green is 18.2, overall 13.5. It's a known fact that customers are ready to pay premium amount for yellow and green for their attractiveness, and the returns are also very high. At present, the recovery rate of overheads is three times of the direct labor expenses. So whatever is the direct labor expense, the recovery rate for that is three times of the direct labor expenses. Manager is interested in allocating on the basis of activity costing, on the basis of activity based cost. The support expenses is overall is 1 crore 20. So they are 40 lakh of indirect labor, 32 lakh of incentives, 20 lakh of computer systems, 16 lakh of depreciation, 8 lakh of maintenance, 4 lakh of energy. He provides additional data. Incentive should be allocated at 40% of labor expenses. Indirect labor is involved in mainly three activities. Half is involved in production run, another half is for physical changeover from one color hair clip to another. Yellow hair clip requires substantial labor for preparing the machine. Remaining is spent for maintaining records of the product in four parts. Another amount is spent on computer system of 20 lakh is for maintenance of documents relating to production run, record keeping. 80% is for production run activity, 20% is to keep the records. Other overhead expenses is incurred to supply machine capacity to produce all the hair clip. Activity cost drivers: sales volume, selling price, material cost, machine hours, production run, setup time. Calculate the operating income. Operating income is profit, and operating income as a percentage of sales using activity based costing system. So we'll have to shift to ABC system. Reasons for the difference under traditional income system and ABC. And the reason is anyway known to us. Go through the question. Please go through the question. Okay. Now coming to this question, as of now, overheads is opposed as three times of direct labor, that is 20 lakh direct labor, overhead 60 lakh, 16 lakh direct labor, 48 lakh, 3 lakh 60, 10 lakh 80, 40,120. So the overheads is 1 crore 20. Now what we need to do is we need to find a recovery rate for each of the expense, and there can be different drivers for different. So working note 1 would be cost driver rate, working note 2 would be apportionment of overheads, and working note 3 is exactly same thing. Overheads will change here. Overheads is going to change in this. So first let's find out the recovery rate. Working note 1, computation of cost driver rate under ABC. Computation of cost driver rate under ABC. Activity, total cost, cost driver name, cost driver quantity, and cost driver rate. Activity, total cost, cost driver name, cost driver quantity, and cost driver rate. Activity, total cost driver name, cost driver quantity, and cost driver rate. Total cost, CD name, CD quantity, and CD rate. First is indirect labor. We then have incentives. So let's first understand the broad category of this. Indirect labor is 40 lakh. Incentive is 32 lakh. What they have said is incentive should be apportioned of 40% of labor expenses, whether it is direct or indirect. Whether it is direct or indirect, 40% should go. 40% should go to direct and indirect. So 40 lakhs plus 40% is some 56 lakh rupees. This will be indirect labor. This will be indirect labor. Then direct labor incentive is 40% of direct labor. 40% of direct labor. Direct labor is 40 lakhs, 16 lakh. So this 1 crore 20, the broad breakup as of now is indirect labor is 56 lakh. How to apportion that is given in the next para. Direct labor incentive is 16 lakh. How to apportion that? 40 percentage. 40 percentage of direct labor. Then I have computer systems, which is 20 lakh. How to apportion that is given here. And other expenses can be clubbed together. Other overheads 16 plus 8 plus 4 put together 28. How to apportion that is given below. So I have four categories of expenses. Indirect labor 40 lakh plus 40% incentive. 40 lakh plus 40% incentive. Direct labor 40% of 40 lakh. What is 40% of 40 lakh is? 40 lakh is the direct labor figure. Incentives for them. Computer systems is 20 lakh. How to apportion is given below. Other overheads is 28 lakh. Machinery depreciation, maintenance, energy, all related to machinery. How to apportion is there in the below data. So let's first write indirect labor and underline that. Amount is 56 lakh. How 56 lakh is? 40 lakh plus 40%. 40% is the incentive. 40 lakhs plus 40%. Now, indirect labor is engaged in three activities. The indirect labor is engaged in three activity. One is production run. One is production run. He is engaged in three activities. Half of labor is engaged in production run, 50%. 50% in production run. 50% in production run. Half is engaged in production run. 40% is engaged in physical changeover. Physical changeover 40%. Of that 56 lakh, half is engaged in production run, 40% is engaged in changeover, and balance is engaged in maintaining records. Balance is engaged in maintaining records. I'll have to get a recovery rate for each of this. 50% is for production run, 40% is for physical changeover, 10% is for maintaining records. For production run, my driver can be number of production run. For production run, my driver can be number of production run. Production runs can be driven by number of production run. So this is number of production runs. We are getting recovery rate for each of the items. 300 runs are there. 9333.33 is the recovery rate. 9333.33 is the recovery rate. Number of production runs 28 lakh divided by 300, 9333.33. 9333.33 is the recovery rate. Physical, any doubts on this number of production runs? Then they are mentioning about 40% is required for physical changeover from one color hair clip to another, because yellow hair clips require substantial labor for preparing the machine as compared to the other color hair clips. Now, physical changeover from one clip to other clip is basically setting up of the machine. You will have to set up the machine and start manufacturing. Setting up of the machine. From one machine, you need to shift to the other machine. That's technically setting up of the machine. So setting up is 100 into 4, 400. 100 into 100. 76 into 6 will be 76 runs into 6. 456 and 96. Can you tell me total of all of this? Total of these four items. That is a setup time. Time taken for changeover. Time taken for changeover.
1052.
1052.
52, sir.
Okay. So setup hours 1052. 1052, and we will get a recovery rate for this as well. Recovery rate is 2129.28. 2129.28. 2129.28. Maintaining records. Last part is maintaining records, which says remaining 10% is spent for maintaining records of the product in four parts. So maybe this varies as per based on the number of parts. So you are required to maintain separate records for every part. Every part. So remaining 10% time is meant for recording it, number of parts. Basically equal division. I'm going to divide this by equally to every machine. This will go to equally to every product. Sorry, equally to every product. This is apportioning 56 lakh of the 1 crore 20 lakhs. Apportion 56 lakh like this. Of the 1 crore 20 lakhs, 56 lakhs has got apportioned like this. I hope this is clear. So have analyzed this part. Then direct labor related incentives. Direct labor related incentives. Recovery rate, I know. Recovery rate is 40% of labor cost. Recovery rate they have already given. 40% of labor cost. Direct labor related incentives. It was 16 lakh. How 16 lakh? 40% of 40% of 40 lakhs. 40% of 40 lakhs. Direct labor cost 40 lakh rupees. 40 percentage of labor cost. 40 percentage of labor cost. Indirect labor also 40% was there. We added that to the indirect labor. This 56 we have already added that 40% related to indirect labor. Related to direct labor we are capturing here. DL related incentives. Then computer systems. This also will be broken down further. Computer systems is 20 lakh. I'll have to break this down further. For maintenance of records relating to production run and record keeping. So they are saying 80% of the time is based on production run. Balance 20% is for the record of product in four parts. Four parts means equally across all the parts. So one is runs related, production runs related, record maintenance. Production runs related is 80% and record maintenance is 20%. Production runs related and record maintenance 80%, 20%. This is equal. Number of parts. Record maintenance is equal. Record maintenance is equal. Record maintenance is going to be equal. Equal for each of this. Production runs part is based on number of runs. Number of production runs. Based on number of production runs. This takes care of 92 lakhs of expenses. Still, we have some more expenses to be considered. 80% is on production runs, 20% is for record maintenance. Then other overhead expenses, or you can say machine related overheads. Machine related overheads just balance 28 lakh. 16 plus 8 plus 4. Machine related overheads. Other overheads, machinery depreciation, machinery maintenance, energy used to produce is based on practical capability of 20,000 hours. Practical capability of 20,000 hours. That is based on machine hours. Based on machine hours, 20,000. This itself has taken away good amount of time. That is, first is getting the recovery rates. Just got the recovery rates now. For the entire 1 crore 20 lakh, I'm splitting that into I think 7 expenses. Production runs indirect expenses, physical changeover indirect expenses, maintaining records indirect labor, DL related incentives, production runs related computer systems, record maintenance for computer systems, and machine related overheads. So we have broken down this into totally 7 expenses. Now we will pass this on to the products. Any doubts on this? Working note 2, apportionment of overheads. Apportionment of overheads. Apportionment of overheads. Particulars, 4 products with 2 subcolumns each. 4 products with 2 subcolumns each. Brown CDQ amount. Black CDQ amount. Yellow CDQ amount. And green CDQ amount. We're going to now pass on the overheads to each of the product. Pass on the overheads to each of the product using the recovery rates which you have calculated sometime back above. Using the recovery rates, we are going to pass on these expenses. We are going to pass on these expenses. Particulars, 4 products with 2 subcolumns each. CDQ and amount. CDQ and amount. Let's start with the first expense. Indirect labor that production runs. Indirect labor production runs. Production runs. We have decided a recovery rate of 933.33. 933.33 is the recovery rate based on production runs. The number of production runs is 100, 76, and 24. 100, 76, and 24. And the recovery rate is 933.33. 933.33. That's the recovery rate we are going to follow. 100, 76, and 24. Recovery rate is 933.33. We are passing on the overage to each of the product using this recovery rate 9333.33. Production runs. Second is physical changeover, which was based on number of setting up hours. Physical changeover we decided based on number of setting up hours. Physical changeover based on number of setting up hours, which is 400, 100, 456 and 96. Number of setting up hours 100 into 4, 100 into 1, 76 into 6 and 24 into 4. 400, 100, 456, 96. Recovery rates we decided is 2129.28. 2129.28. Recovery rate is 2129.28. The recovery rate is 2129.28. Physical changeover. Third one is maintaining records, which we said equally for everything. Which we said is equal for everything. Which we said is equal for everything. Equal for everything. 1,40,000 equal for everything. 1,40,000 equal for everything. Equal for everything. This is the first expenditure. Indirect labor part, we have captured it and distributed it to the three products, four products. And DL related incentive. What is DL related incentive? Is direct labor related incentive, which is 40% of the respective labor cost. 40% of the respective labor cost. So the labor cost is first product is 20 lakh, so which is 8 lakh, 40%. Second product 16 lakh, 6 lakh 40. Third product 3 lakh 60, 1 lakh 44. The last product is 40,000, which is 16,000. 40% of direct labor. 40% of direct labor, DL related incentives. DL related incentives, direct labor related incentives. DL related incentives. DL related incentives, 40% of labor cost. Then we have computer systems related cost, production runs related and record maintenance. 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 And the record maintenance. Production runs is 100, 176 and 24. And the recovery rate is 533.33. 533.33. Recovery rate is 533.33. Recovery rate is 533.33. And the record maintenance part is equal. Record maintenance part is equal. record maintenance is equal. Record maintenance part is equal. Slightly lengthier kind of a question. Machine related overheads. Machine related overheads 140 per machine hour. One machine hour. What is the number of machine hours? Is first product is 1 lakh into zero point 0.1. 1 lakh units into zero point 0.1. 1 lakh units into zero point 0.1, 10,000. 1 lakh units into zero point 0.1, 10,000. Second product is 80,000 into zero point 0.1, 8,000. Third product is 18,000 into zero point 0.1. And fourth product is 2,000 into zero point 0.1. All of this, the recovery rate is 140. Recovery rate is 140. This will give me total overheads. This will give us total overheads. The total overhead should add up to 1 crore 20 lakhs for 4 products. Some up and down rounding of difference can be there. Total overheads product wise. Product wise, we'll get the total overheads. It's adding up to 1 crore 20, some 1 rupee extra is there. Get the total overheads. Please add up and get the total overheads. Get the overall overheads figure. Total overheads figure. It is going to have some deviation. That is more of the rounding of deviation. Earlier the overheads were different. Now the overheads are different. Earlier it was very simple. 60 lakh, 48 lakh, 10 lakh and 1 lakh 20. 3 times of direct labor. 3 times of direct labor. Now the overhead figure is undergoing a significant change. Slightly a lengthier kind of a question because we had to analyze the break down the expense into so many categories. We broke this down into 7 categories, got a recovery rate for each of this. Hope this is clear. Hope this part is clear. Now we are going to prepare an income statement in the same manner, exactly same heading. Overheads will change. Overheads will change. Income statement under activity based costing. Particulars, 4 products in total. Whatever exactly they have done, exact same thing. Brown, black, yellow, green, and sales, material cost, labor cost, overheads, total operating income, exactly same heading, return on sales percentage. Overheads figure alone will change in that statement. Overhead figure alone will change in the statement. Sales 1 crore 50 lakhs, 1 crore 20 lakhs, 27 lakh 90, 3 lakh, material 50 lakhs. I'm just copy pasting the number 40 lakhs, 936, 110, 20 lakh, 16 lakhs, 360 and 40. Do one more thing, just a small change I'll do. There is in between one line item I'm writing. I'll explain that. Direct labor incentives. Technically, direct labor incentive is not a overhead. Technically, direct labor incentive is not a overhead. It will form part of labor expense itself. So that alone, I'll write it separately. Direct labor incentive. Direct labor incentive is not a overhead. So that alone, I'm distinguishing here. I am distinguishing that part. When I write overheads, let me subtract this incentives alone. Ideally, incentives I could have removed it in that earlier table. Incentive is not a overhead because it's related to direct labor. It is related to direct labor. I think solution I would have written it overheads only, but I think this is better. The solution will be better. Considering DL incentives in direct labor. Direct labor incentives, we can consider it in direct labor itself rather than overhead. Now, the overall operating income will continue to be 40 lakh 74. The breakup will be different. It will be broken down into different figures now. Overall profit remains the same. In fact, question was saying that yellow and green are more profitable product and all. But in reality, these two products are technically loss making for us because they incur a huge overhead. Earlier, we were not apportioning that much. We were just doing 3 times of direct labor. But in reality, the overhead is very high. And the margin for these products are first two products are giving more than 20% margin. Yellow and green are having huge losses. Yellow and green is having huge losses. Overall margin continues to be 13.5. Everything is same. One decimal they've done. I'll do one decimal itself. Overall margin is same. Whatever the question has mentioned. The individual profit is 21.6, not 13.3, 22.7. And the next two products are loss making as per our calculation. Loss making as per our calculation. Question was showing a profit there. Question was showing a profit, but they are loss making ones. They are loss making ones. Question had asked for two things. One is reason for different operating income is under traditional system, overheads is driven by a single driver, which is in this question labor cost. ABC you have multiple drivers, so that is the big difference between ABC and the traditional system. Traditional system single driver, ABC multiple cost driver. I'm not even sure whether I've written the theory answer there. Yeah, differences because of the difference in overheads borne by the each of the product. Activity based costs appear to be more accurate. That is more accurate. Any doubts on this? Any doubts on this?